Hi, this is Zak Mir with the Bulletin Board Heroes on Wednesday, the 21st of November. Starting off with Bellzone Mining, where you can see that shares having another go at breaking the top of this falling wedge from July, point 0.3 at the obvious resistance, ideally above the 50-day moving average there at 0.33 to really get the thing going. And the best case scenario here is that the shares spike up and fill the gap, the bottom of that gap there at 0.56 over the next few weeks. Stop loss obviously back below zero point 0.2. Next up is Eurasia Mining, where I can see from the old trend line chart there that, well, that's from mid-October, that there was the breakout there around the 0.4 level. We had a bit of a dance there towards 0.5 and then coming back again. We've been in the run up to the cross between the golden cross between the 50-day and 200-day moving averages, but the reason for the bullishness previously was that the 200-day line has been rising even as the share price fell during September and October. Current situation, obviously waiting to see whether this gap will be filled down to 0.8, and then the shares can then try and retest the initial spike of the day at 1.09 pence. As far as the stop loss is concerned, really an end of day close back below 0.8 is the best we can do on that. Greatland Gold are covered at the beginning of the week, and obviously it had the good news and everything else. Gapped through resistance at 1.2. Will be interesting to see now whether it can hold 1.48, which was the old September peak. Any dips towards that probably regarded as a buying opportunity at the moment. Stop loss just below that, and hopefully then targeting 2.2 to retest June resistance after that. I shied away from looking at Imaginatik on several occasions in the recent past. Obviously, there was the horrible gap down there for the stock, but looks like we've got a U-shaped reversal here over the last month or so, and the key level to break here, 3.29 pence, the bottom of the gap down. As I hinted, normally when you've got a stock which is this volatile, the best thing is to stay away, but at least from a charting perspective, above 3.29, the 50-day moving average at 4.68 could come into play. Stop loss back below 2.5, which was the the initial resistance this week. So obviously, with that situation, you want to be quite strict on any money management for the shares. Interesting, it's Sosandar at the moment, the last share of the day here, rising trend channel from April. We've had a bit of the jiggery pokery just below 30 pence to sort of clean out a few weak bulls. Obviously, we had the triple top there above 45 pence. But the gap today through the 50-day moving average at 37 pence could be a prelude to a new leg to the upside. Initially 40 pence resistance, but then looking for a big target there at 55 pence. Stop loss back below 35, so 34, 33 pence, probably the best thing for that. That's it from me. More updates tomorrow.